Hello, good afternoon, happy weekend. Yes, welcome to West Fori Forest Academy. This is another section of a forest we are going to deal with. Remember where we started from? We talked about what is forest, we talked about terminology that's being used in forest. Now is the next one that what we are going to discuss, which is paramount in the aspect of what of a trading, which is what we call candle formation. If you remember, candle formation is what you are using. The methodology you are using as a trader to be trading. Remember, it's not the only candle that you can use to trade. I get me. You can use bar chart. You understand? You can use line chart. I get me now. But candle is the best option every trader are advised to be using, in the sense that candle has four formation among, because I just now it has four formation. And if you don't remember, the origin of the word of the candle started for what with Japanese. Muniesia Ama is the name of the word, the founder. Oh yes, sir. Is the name of the founder of the candlestick. Yes, sir. Now, when we are talking of the candlestick, it's a means, a method you can use, yes, sir, to identify the movement of the market. You can use it to know whether the market is uptrending, or the market is downtrending, or the market is ranging, through which of a body. Candle has two means. We have the body and what we have the shadow. Yes, and what do you mean by body and shadow? As I said, we have four segments of a candle. Candle is like this. It has a body, it has shadow up, it has shadow down. I hope you can see it. Yes, sir. That is a candle. It has photo. We have shadow. This is body, and this is higher shadow. This is body. This is lower shadow. Are you getting me now? That is four segments. We have high, we have open, we have close, we have open. If it is a green candle, we have what? We have low. If it is a green candle and the candle is formed, you can use color to identify. You can use any color. Some trader use red for bearish candle, while some use green to identify a bullish candle. I get it now. When you see a bullish candle will started from below. It will started opening from below. I get it now. When it move from below to close, it will move from opening to low before it proceed to what? To close and to high. I get it now. Don't forget, candle has four segments. We have the low, we have the body, we have the low, we have the opening, we have the close, we have the high. And that is exactly what I'm showing you. If it is a green candle, it will have low here. This place will be opening. Are you getting me now? Can you see? Opening. It will be opening. That place will be opening. Are you getting me now? This place will be close, and this place will be what? Will be high. That is candle. Are you getting me now? Those are the four segments of a candle. If it's a green candle, remember it will open below, proceed to low, before it continue to close, or before it continue to high, or before it close. Are you getting me now? It will open. From opening, it will move down to low. From low, it will produce to what? To high. Before it close. That is what? That is green candle. Likewise, the vice versa. The same red candle. If it is red candle will open from above. When it open from above, it will move to high. Before it descend down, come down to low. Before it will now close. That is what make candle essential, because of the four segments. Now, when we are talking of candle, by me, I categorize candle into three segments. I get you now. We have single type of candle, single category of candlestick formation. I get you now. We have double type of candlestick formation, and we have triple type of candlestick formation. And for this lecture, we are going to be treating the single type, this type, so that before we put it for you to understand this very well. The single type category of candle formation the single type of candle formation is what? Is the candle, I get it now, that are forming without body. A candle that are range, we call it a range market. It's a candle that has been caused a pause in the market where the buyers and the seller, they are wrestle against each other. They are dragging. Am I going to be in the one that will control the market? Is it that is, the buyer? When you do the buyer, it will go up. I get you now. Am I going to be the seller? To go down? I get you. Those are the two types of people. They are wrestling war between two buyer and seller. Don't forget, wherever there will be a seller in the market, there must be a buyer also. That's what we call a doji, and that's the name of the candle. The single category candle is we call doji. Number one, that is doji. Let me show you. This is doji. As you can see, doji, they are the candle without what? A candle without body. They are just skeleton. Are you getting me now? It's doji. We call it doji. We call it wrestle between the buyer and seller. Are you getting it? It's sign of plus. Are you getting me now? We say sign of the cross is a doji. Remember, doji may have body and it may not have body also. If it's sign of the cross, what does it mean for you to know? If it has body, it will have a minor body. Are you getting me now? But the up and down of doji must be equal if it has small body. Are you getting me now? That's what you must be. That's what I call it the sign of the cross. Are you getting me now? That is doji. And doji can also be a what? It can be a what? A dragonfly doji. In the sense that a doji, a candle that doesn't have body. I get you now, but it will have a small up and a long down shadow. I get you now. That is what we call dragonfly doji. I get you now. That one is also a bullish candle. When you see doji always appear, don't forget, put it at buy. Whenever you see a doji, either the market to retrace, to change direction from uptrend to downtrend, or the market to change direction from downtrend to uptrend. Always put it at the back of your mind that whenever you see a doji, I get it now, you will always be in your mind that who is going to take in charge of the market. The next candle that form after doji determine the strength, determine the person that taking charge of the market. Always know doji always appear at the end of the uptrend or at the end of what? Of downtrend. When you know it, you will now be expecting, you will now be waiting for a candle to what? To follow it. If a doji appear up at the end of uptrending and a red candle now fall, definitely you are now know that sellers are coming to the market. Are you getting me now? When a doji fall at the end of downtrend market, are you getting me now? And a green candle now follow it and open, when a green candle follow it, open and close above that doji, definitely you have know that what? Because it's a signal. All this candle formation we are going to be what? We are going to be discussed one after the other as we continue in our next lesson, continuing class. They are what people are calling signal in the market. I want a signal, is because some people do not know how to identify them. I get it now. These are what give direction to the market. You must be able, as a trader, once you are able to identify it, once you are able to identify it through your chart, you understand? Because you don't trade blindly. That is what you call candle formation, because it's the one that will give you direction of that. I believe that the next class, you understand, you are able to understand the another section of what? Single category candle. Thank you.